let's move ahead. In today's world, debt is an everyday thing. You and I take debt for a variety of needs, or from buying a house to financing your education and other needs. Debt is a part of an ordinary individual's life. But let's face it, too much debt can put you in some serious trouble. And if you are one of those who's struggling to repay his debts, then this segment is totally for you. We are joined by Ritesh Srivastava, founder and CEO of Freed, and Aparna Ramachandra, founder, director, rectifycredit.com, to help you come out of deep debt. Let's take the discussion forward. So, welcome both of you. Ritesh, you at Freed, and Aparna, you at rectifycredit.com really help people and save them from getting into deep debt trap. But then, before I get into this, I really want to understand the kind of trend that you guys are witnessing at your own platform. So, let's start with Ritesh. Ritesh, what's the kind of debt demand and requirements so far is reported on your platform?
Well, first of all, thank you very much, Kavita, for having me. Pleasure to be on the show. Well, we are seeing a systemic problem of debt, like you rightly mentioned. You know, if you look at the personal loans and the unsecured loans, especially in credit cards, we have seen a 3x growth over the last 5 years, and the same is evident on the platform as well. We are seeing a lot of high cost debt being enrolled, and consumers unfortunately saddled with debt who are unable to repay their obligations, or some of them too over leveraged, going from paycheck to paycheck, not being able to kind of save any money, have any extra cash flow available with them. And so we are seeing increased surge from such consumers who are actually coming on the platform seeking relief, seeking resolution from debt, seeking to lower their EMIs, some of them who are over leveraged.
All right, Aparna, what's the trend that you are noticing?
Hello,
Aparna,
Kavita, can you hear me?
I can hear you.
Okay. So apart from that, what generally the trend is, during the lockdown, when the rate of interest were getting lower, a lot of people opted for home loans. So today, the number of customers who are opting for a home loan is slowly coming down. I'm not telling it's a big fall, but there is a marginal decline in that. And the profiles with bad credit profiles that are coming are all personal loan borrowers, and who have defaulted and are now not able to manage their repayments. So this is the overall underlying trend. And in that, there is also a 20-30% of people who are defaulting on their auto loans. So if I can put it, then personal loan comes first, then comes auto loan, and then maybe a small percentage of credit card. We are still not seeing home loan defaulters yet. Kavita.
Is the personal loan demand on your platform as high as what Aparna mentioned, Ritesh?
Yes, actually, as a matter of fact, when it comes to debt resolution, right, the very fact that personal loans and credit cards or any form of debt that is unsecured, right, is a loan ideal for a resolution, or consolidation for that matter. Like Aparna rightly said, we are seeing lesser demand on home loans and auto loans. There have been some defaults on auto loans as well. But Freed as a platform, we work with consumers, especially on the unsecured lines of credit, which is personal loans and credit cards, and also the fact that these loans are typically at a very high cost. We have seen government raising the rates for the last 3 or 4 quarters already, and the debt is loan is increasingly getting more expensive. As it is, we have credit cards starting at a 48% APR. Some of the personal loans that we have seen are going as high as 40-45% APR as well. And not to say, the app loans and newer form of credits that we are seeing, BNPL, and other forms of credit, which is just adding to the debt trap for the borrower, owing to the high interest rate that they come with. And of course, some of these, complicated app loans, which borrowers are unsuspectingly getting into.
Then, before we dive deep into this discussion of how to get rid of this debt trap, Aparna, please explain us what exactly is a debt trap, because it's easy money, quick money, instant loan these days, and people don't understand the kind of loan portfolio, if I can call it, they have created themselves. They've fallen into this deep trouble. What exactly would define, or what would be a definition of a debt trap?
To put it very simply,
Yeah.
a trap is where you are completely, you've lost, exhausted all your options. You are in now a very bad circle of, a vicious cycle where you're not able to repay your original EMIs, then your interest is getting accumulated, and then you are beginning to default. Now, till there is one part of the story. But what happens when you get into a trap is you take additional loan to repay this older debt. So then there is a bigger cycle that you get into. Earlier, 10 years ago, when we started Rectify Credit, we saw a lot more of people who used to revolve their credit card debts. But today, last 3-4 years, there is no company that is taking over an existing credit cards balances and giving a new credit card. So that part is thankfully over. But what we are seeing scarily is people using their credit cards to invest in mutual funds, people swiping their credit cards to invest in the stock market, and then when there is a crash, there is erosion of value in that stock that they have bought, and they are sitting on a huge pile that they need to repay on the credit card. So this is number one. Number two, when people take personal loans because they are not able to get a home loan, or they are taking a personal loan because an education loan is not getting approved. So these are typically scenarios where we are seeing what we call today in current scenario a debt trap. And as we are all aware, the cost of personal loan is way too high. Of course, not as high as credit card debt, but personal loan is equally expensive. And if you are not working in a tier A company, or you're professionally, you're not in that tier A qualifying slab, then your rates of interest are also way higher in personal loans. So these are situations where people are getting into debt trap. And sometimes people have taken top up home loans where they didn't need to, or they have taken top up home loans because somebody advised them that is the cheapest source of debt to clear their credit card dues. So they've gotten out of one mess. But today, with this continuous rising interest rate, the EMIs are going up. So, there also there. So there are multiple scenarios where these debt traps are, we are able to see. And this trend, unfortunately, is increasing. And today, in Rectify Credit, when we are seeing credit profiles, 9.5 on 10 are personal loan defaulters. And like I always tell you, Kavita, this is my biggest fear. In the next year and a half, we are sitting on a big balloon of personal loans that just going to go poof on all our faces. Kavita.
Personal loan is something that one should definitely, in the first place, not look at. But then, since now we understand what exactly is a debt trap, Ritesh, help us understand. See, it is not wrong to take a loan. Okay, you have certain amount of debt on you is not entirely wrong, but then it's just the kind of a loan that you have, the way you've taken it, the strategy that you have for your repayment. All this really matters. So ideally, what should be your guideline of taking a loan, Ritesh? If you can just help us. For example, if someone someone is in dire need of money right now, okay, what should be the first option that you should consider?
I think the first step would be to, assess your ability to repay, given the fact that, what your likely income is going to be, what your expenses are. So do a proper budgeting. That's one. Take a loan I mean, there are bad debts and good debts, right? I would consider a home loan as a good debt. I would consider even an auto loan as a good debt, right? The purpose of the loan is very critical here, Kavita. I mean, what is it that you're taking a loan for? If you are taking a consumption loan, for example, to buy a cell phone, or to going on a vacation, or for shopping, and you put that on a credit card EMI or a BNPL, I mean, that is going to snowball into a big amount, right? Which you will struggle to repay. So basically, I mean, the theory of finance for the things that you do not need today, and if you are buying it for the money that you don't have, very soon you're going to have, not have money for the things that you need, right? I mean, so essentially, a bit of financial education at Freed, we definitely, our first objective is to, instill financial discipline in the borrower, because debt resolution is not or debt relief is not something which is some magic wand. There has to be an intent in the borrower to come out of debt, and we are a full platform, so borrowers seeking relief are the ones who are approaching us. The new product that we launched is debt consolidation, where we are also helping borrowers who have high cost debt that they're dealing with, right? And helping them consolidate that into one single loan through our lending partners. So the key is going, and we also look at factors as to, why did the borrower go into, or fall in the trap? How did he take that loan, right? And why did he take that loan? So I think for in the when we are seeing an economy turning into a 5 trillion goal that we have, it's largely going to be consumption driven, right? And consumption is going to be fueled by credit. So I agree with my co-panelists that we there should be increased caution in borrowers, among borrowers, most of them being early millennials and Gen Zs, to actually very carefully borrow, and only for the things that they definitely need and that they must have.
Important thing that you mentioned in the beginning, Ritesh, was to have a repayment strategy. Aparna, how can one lay this down for themselves?
See, like you said, there is nothing wrong in taking a loan. So we are not taking a judgmental call as to why did you borrow. You've taken the loan, but then multiple loans, and even if you've gotten into a scenario where you are unable to repay, which is still okay. So don't get overwhelmed, tied, or they are trying to see how EMIs can be reworked. We are not talking about moratoriums, but in the existing EMI cycle. So multiple options are available. Seek help, but then the first step is yours. Do that math. And when you go to the last thing that I would want to emphasize is, when you go to a professional, do not hide any of the facts. State everything in black and white, because only then the other person is in a position to help you, and we can together chalk out a plan and get you out of this.
All right,
And
now
don't
let's
take additional debt till you resolve these earlier issues.
totally.
Kavita.
So now how each of you really help these people come out of the debt trap. Let's take it step by step. So Ritesh, if someone comes at Freed, you obviously, apart from the fact that you have to also do their financial planning and know what kind of a debt trap they are into, how do you work? Do you have tie-ups with banks? Do you figure out with the banks the possibility of maybe extending the tenor of the loan that they have? What all gets into this entire process? Just help us understand.
Uh, at Freed, we have two products. We rather address the debt at a very early stage, prevention stage as well, where we have a consolidation program in partnership with few lenders, banks and NBFCs, where we are able to consolidate a high cost debt of borrowers, and it's the industry's first unique product where the new loan dispersed for those borrowers are strictly meant only to repay the existing loans, and no money hits the savings account of the borrower, because we don't want him to put in additional debt trap. The objective being, we want to lower the EMI burden for that borrower and give him some extra cash flow. And we have seen that such borrowers have already been wanting credit. The best way, the easiest possible route is to take a loan to repay a loan, right? And that's something that we want to discourage, and we've always discouraged. The other product that we started with, is the debt resolution program, where we have borrowers who, due to a financial hardship, have already fallen in a trap, are already behind, are emotionally and financially distressed, behind on their payments by 90 days, facing 90 days or more, facing a little heat on the collection side as well, and going through this, embarrassment of, having to deal with creditors, having to deal with collection agencies. I mean, debt is a negative emotion, Kavita. It brings a lot of anxiety, depression, anger, frustration, fear. You call it, all these emotions come with debt, right? So our objective first is to get the borrower, first make him understand what kind of problem he is in. And like I said, it's a pull platform. So we have borrowers only who are seeking and have an intent to come out of debt approaching us, right? So the first job is to ensure that they are fully committed to stay in the program, and they know that they have to set aside some funds into a special purpose account that we set up for them, managed by a trustee. Once they start to deposit once we have done the basic budgeting qualification for these borrowers in terms of what money they can set aside every month, we let the trust account build up for these borrowers, watching them monthly, hand holding them through the entire process, counseling them. And once we have the balances built up, we actually negotiate the debt with the creditors. And we don't really have to have a tie-up. Although we are working with 55 plus creditors across India, where we are able to now offer bulk settlements to these creditors. And the way we look at it is it's a win solution for the borrowers as well. And for the lenders as well, because otherwise they would have had to write off those loans. In our with Freed's program, they're able to recover at least 45 to 50%
Right.
on every loan that has gone in PA or probably would have gone into default.
Interesting. Aparna, what about you?
Our journey is a little different journey, where typically for us, individuals come to us when they know that they have messed up, so they are not going to get new loans, and their credit profiles are bad. So our first step is to pull out a credit report, do a complete analysis, and then we work with the borrowers and the lenders, get them to agree on a particular platform, and then see what is the best solution that can be worked for the individual, and then move accordingly. There are situations where customer has just been plain lazy, not collected his documents, or not done his basic completion of a particular loan that he had taken in the past. There are situations where there are identity issues. So there are multiple things that they come up with, but moral of the story is there is a complete before and a after story. So the person who walks in is coming with a bad credit or a weak credit profile. The individual who walks out is someone with a solid credit profile and who is now credit worthy to get kind of loans that he is looking at. So
All
that's
right.
the entire journey that we walk through with it.
All right. So anyone who wants to come out of a debt trap, these are two platforms that we presented. And even before you get into one or just take any kind of loan, it's always recommended that you go to your financial planner, at least think through it properly. And then, as my panelist also recommended or suggested, that always have your repayment strategy in mind before taking any loan. Thank you so much, Ritesh and Aparna, for being on the show and helping our viewers with that. We'll take a quick break.